can you remember this pattern that I shared last 2 weeks? This pattern, if you can remember this pattern, then I want to believe you are able to catch that move on GBPJPY, because this same pattern provides itself for us last 2 weeks. Then the same thing happened on GBPJPY earlier this morning before the London section. And this is a very easy pattern that works 9 out of 10 times. This is a very easy pattern. The market is clearly on an uptrend over here. Then we have a shift to the downside over here. Then the market still broke structure. After shifting structure over here, the market broke structure over here. Then we start getting our consolidation. The market's trapping people to start selling, trapping early sellers so they can use them as liquidity to move the market. You can see the moment the market gets to this point of interest, after clearing all the liquidity that is the inducement that is resting over here, you see that momentum, a very full move momentum to clear all the downside liquidity that is resting over here. You can see the momentum that the market used to like the momentum of the falling momentum is very, very strong. This fall happened within 1 hour, within 1 or 2 hours. Sorry, within 1 or 2 hours. I can't even remember, because this is 15 minutes time frame. This is 15 minutes, 15 minutes, 15 minutes, 15 minutes. That's 1 hour in total. So that's one thing about the market. If the market is not yet, you can actually mark this as your liquidity, this level as your liquidity, and it's going to work for you the first, the second, the third time. But the market won't hit full TP, and you won't get that momentum you want until the market is done clearing all the liquidity, all the inducement that is resting above here. You should know this is our first value pullback over here, and this is our main liquidity. You should wait until the market clear this liquidity, clear this out, and tap into your POI. Don't rush in. If you rush in over here, the market will give you a little bit profit, then come back and use you as inducement again. So patience is very, 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 very important when it comes to trading patterns, trading consolidating patterns like this. So I'm going to go ahead now and take all this out, then give full explanation on how I know the uptrend is over and now we are on a downtrend. So I'm going to go ahead and take this out. So when the market gets to this my resistance level yesterday, I I realized I want to see after the market. The main reason why I mark out my supports and resistance is to see how the market reacts over there. You don't trade your support and resistance in the kind of way that you just place your order as the resistance level, or at your support level. You want to see how the markets react. Let's mark out how the markets react over here. We are on an uptrend over here. We are having our higher highs and higher low. Then the market shifted structure to the downside, giving us this uh, lower highs and lower low. Then we have a break of structure over here. That's my first confirmation that this market is not on an uptrend anymore, and we are now on a downtrend. We have a market structure shift over here on a lower time frame, and on the higher time frame we have this break of structure over here. So the next thing to look for now is, after we already have our um break of structure and market structure shift, the next thing we are looking for is our inducement. And where is our inducement? This level over here is not our inducement. This level over here is not our inducement at all. So I don't consider this. The reason why I don't consider this level as our inducement is because this level was printed, this high was printed before we have this our break of structure. And this is not the strong eye that I'm looking forward to sell the markets from, because some people are already having this level as their point of interest, and that is the market trapping them to start selling. In a layman explanation of what higher highs and higher low is, some people will take this as a low high, forgetting that this whole move is an internal structure, and the markets will not really break any strong level. This is where the markets break structure, and this is our first value pullback after the break of structure. This is our first value pullback, and that's our inducement. This is our inducement. You can mark it out like this, and you can mark it out this way. This is our inducement. This is the level we are waiting for the market to take out early sellers before selling. And knowing if you are going to use your order block, or you are going to use your breaker block, it's very easy to do that. Very, 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 very easy to do that. The only thing you need to look out for is the unmitigated area. As you can see over here, our breaker block has already been mitigated by this pullback that happened over here, and we have a fair value gap very close to this level. Our fair value gap is very close to our point of interest over here, and that's a very huge confirmation for us to use our point of interest, because in this market structure now, our point of interest is the only area. Our order block is the only area that has not been mitigated yet. This breaker block has already been mitigated. You can see this this pullback that happened before we get our break of structure has already mitigated our breaker block. So I'm only interested in using the order block now. And when we get this pullback, we get another pullback into this our breaker block, but I'm not looking forward to take my setup from here. The reason why is this breaker block has already been mitigated. That's the only reason I'm not interested in using this breaker block anymore, because I know anything that is happening around this breaker block and around this eye over here is just the market trapping the early sellers, to start selling, so they can use them as the liquidity to move the market. The next thing I'm going to do now is place my order at this point of interest and just wait patiently for the market to get to my POI. This is our order block. The reason why I don't mark only the body of the order block here, I picked it with the wicks. If you look close, you can see we have more wicks than the body. If our body is more bigger than the wicks, I will like you will have to pick your point of interest from the body. But in this case, this is an bearish engulfing candle. This is an bearish engulfing candle. So I'm going to pick the whole candle to be safe and to avoid me missing the entry. So this is our point of interest, and I'm going to be waiting for the market to clear the sell side liquidity, and that's going to be my target. That's going to be my take profit. You don't have any reason to keep your stop loss very tight. You don't have any reason to keep your stop loss very tight. You are not trying to prove anything to the market. You are trying to make money from the market, and not trying to prove to the market that you are the god in analyzing the market. And this is a clean 1:5 RR setup. So that is that on that. That is how easy and how clean it is to use this chart pattern. This consolidating pattern. This is very easy. Your break of structure is still the same thing. Trading your break of structure, your inducement, and your on order block or breaker block, and clearing the downside or upside liquidity. That is how easy it is for you. You can use it. So if you have any question, you can ask now.